Moody's Investor Service. The agency says that India's banking system is moving past the worst of the asset quality down cycle, supporting its stable outlook for the sector over the next 12 to 18 months. Ritu Singh caught up with Srikanth, Vadlamani, as well as Alka, Anbarasu, Vice President, Financial Institutions Group at Moody's Investor Service. She began by asking them about the rationale behind the stable and slightly more optimistic outlook.
Our stable outlook is typically in relation to where we see the bank's ratings going. And the stable outlook denotes that in general we expect the bank's rating will broadly remain stable. Now that needs to be kept in context of what we are seeing in the banking system. So one, on asset quality, which is the key area of challenge for the banks, we see that maybe the asset quality is reaching a bottom of the cycle. There will be some deterioration, but the pace should be lower. The bank's solvency position is also challenged. But we think that all these factors are largely incorporated into our ratings of the banks. And hence we see that between the 15 banks that we rate in the system, their rating should broadly remain stable over the next 12 to 18 months.
She spoke about asset quality, Srikanth. After the AQR, how much of the problem do you think is really being addressed, and how much more is there to come that will really impact the profitability of the banks, at least in the near term, that you could tell us?
Sure. So when we had put out the sector outlook last year, we had estimated that the actual NPA or impaired loan ratio for the banking system is probably 2.5 to 3 percentage points higher than what banks were reporting at that time. Now we are saying that the actual level of impaired loans is probably 1 to 1.5 percentage points higher. And the significant reduction in that has been on account of AQR. So we think AQR has been very material. They have recognized a significant amount of problems, although not all. And to us, the key point is that before AQR came in, I think the RBI governor at that time had said that they expect banks to clean up their balance sheets by March 17. Yeah. Probably with the benefit of hindsight, we should have taken that statement very seriously, because the actions since then have lent a lot of credibility to that. So we do think that by March 17, a lot of the cleanup of the balance sheets will happen.
Right now, your outlook on the banking sector is stable. What will be the key factors that will trigger a re-rating for the banks?
Well, on the positive side, it will be if the banks are able to successfully address the capital issue. And the easiest way of doing that, although you may argue that it's actually the most difficult way, is by demonstrating access to equity capital markets. Because if they're at a stage where they're able to convince investors to invest in their equity, that will solve their capital problems, and that is clearly a big positive driver. On the negative side, clearly, if we are wrong in underestimating the extent of the asset quality problem, if we find out that the actual asset quality problem is much more than what we think it is, clearly that will put some further negative rating pressure on the banks.
All right, let's